It's Brad Thomas here today with The Street, and I'm here today with Milton Cooper, the co-founder and co-chairman of Kimco Trust, Kimco Realty Trust. Good to see you today, Mr. Cooper.
Thank you. It's good to be here, Brad.
Great. Well, listen, Mr. Cooper, there's a lot of activity going on today in the world of retail. It looks like, since the Great Recession, a lot of the retailers are coming back into the market, expanding, occupancy's up. Just listened to your last earnings call. Tell us a little bit about the recent performance with Kimco and what you've seen of late in terms of your fundamentals.
Well, the fundamentals in the real estate business have never been better. There hasn't been new development for a very long time. And as a result, there isn't that much space available. And retailers really need to expand to attract people, to have excitement in getting help, getting people in the stores. So on that basis, it's been a pretty good time to be in the retail real estate business.
Sure. Ben Graham said one of the cheapest ways to get to a margin of safety is diversification. Kimco has perhaps one of the most diversified REIT structures today, with over 800 individual properties or shopping centers in the U.S., Canada, Mexico, Puerto Rico. Can you tell us a little bit about your diversification and how you're doing today?
Well, we have no single tenant has more than 1.5% or 2% of our rents. And as a result, a major problem with any one retailer can't have a major effect on our cash flow stream, etc. So we're diverse not only by way of tenants, but by way of geography and type of tenants.
Sure. Now you've come out, and I know in several of the more recent calls I've seen you've really simplified your model. You're selling off a lot of the secondary markets, really focusing on densely populated, high barrier to entry markets. Can you tell us a little bit about the simplification of your company and what you're doing today?
Well, simple is always better, because if you don't have simplicity, you're going to have a complexity discount, which we'd like to avoid. So that we feel getting back to our basic retail business. We're in the process of disposing all of our non-retail holdings, which are practically done, and focusing on markets with good demographics is a good menu to create growth over a period of time.
Sure. Now, I believe you've announced also you're selling off the in-town, which was the extended stay concept.
Yeah, again, that is part of selling off all the non-retail holdings, and that is scheduled to close this month.
Okay. Now, another transaction was the recent one was the Super Value transaction. Can you tell us a little bit about that investment?
Well, we're very excited about that investment. We had previously invested in the Albertsons acquisition, and that's turned out dandy. We've gotten back 5 times our money and still have an interest in the business. The very same management team that did Albertsons, Brad, is in this transaction. So we think that Super Value has needed a dynamic new team, and they have that. And all you have to do is to go into the stores and see the difference. So we think that we are optimistic that we're going to achieve similar results with our Super Value investment that we got in our Albertsons investment.
Sure. And that's a pretty strategic investment in that you are controlling. There's a good bit of real estate that is involved in that, correct?
Yeah, there's wonderful real estate with it. There's a star market in Boylston Street in Boston that has fabulous other uses. There's excellent properties in Chicago. There are so many properties with higher and better uses, and with room to continue to have the supermarket there.
Sure. The Great Recession was difficult for a lot of REITs. I know Kimco, did cut their dividend throughout the Great Recession, but what I've been amazed at is the growth of the dividend coming out of the recession. I think in 2011, Kimco grew the dividend 12.5%, 6% in 2012, and so far this year, I believe over 10% in terms of the dividend. So can you tell us a little bit of what's driving Kimco today? Obviously, your earnings are improving. You're able to really grow this dividend and hopefully get back to where you were before.
Well, what's most exciting about the dividend is that we have a very low payout ratio. A REIT cannot have retained earnings. Under the tax law, it must distribute. But we accomplish a form of retained earnings by having a low payout ratio. And that gives us the ability to increase our dividend as our earnings and funds from operations increase, and we've kept it in line, increasing the dividends, and at the same time, not increasing the payout ratio.
Sure. Last question, Mr. Cooper. You know, the Kimco is one of the few REITs that have a BBB plus or better credit rating. I believe there's 11 REITs that have that honor. Can you tell us how important that is today to Kimco to have that blue chip balance sheet?
I think it's very important because one of the most important aspects of any business is positioning your balance sheet to have access to capital at all times. And that rating and the balance sheet enables us to do that. And now we have to have the people who are fast on their footwork to take advantage of that balance sheet.
Great. Well, thanks so much.
Thank you.
Appreciate it. It's Brad Thomas here today with Milton Cooper, co-founder of Kimco. Thank you very much.